to this week's portfolio. Currently it is 7.7k, and overall you see the it's 1.08 gain on $35. And dividends it's 480. Let's go to last week. Last week market was on the downside 0.99%. Let's go to the activity. Yeah. Prior to last week we invested $12. So that trading happened for $12. Everything now moving to TSLY for Netflix. Then we got a dividend for 4.12 from TLTW. On top of that, we invested $40. So next day, the morning trade again $20 happened for TSLY, and we created a new pie chart for Disney. That's long term. I'm planning to invest on Disney. So once Disney starts their dividend, we can calculate the dividend. So right now, whatever there is a difference, we cannot split between the borrow and the invest. I'll invest in Disney. So only $1. So $21 trade happened. Other than that, 4.12 whatever we got from TW. That again we invested. That's in a Regal. So we invested in TSLY. Then we deposited another $12. So out of that $11 went to TSLY, and $1 went to Disney. Again on Friday we invested $17. So coming Monday we'll invest this $17 to TSLY and Disney. Going to the holdings tab, we'll check the top three performing stocks. Right now, Costco, Tesla reduced last week, so Tesla again went back to second position, and Costco still holding up. Costco's our average price is 513. Currently, Costco is on 566. Third performing stock is QYLD. Average price is 16.47, and currently it is 17.13. So EPD took backseat, and the worst performing shares again it's IEP, that is 28.3 is our average. Currently it is around 19 or 20. TLTW, but we got a dividend, so we'll hold it. And MAA, now real estate is coming back a bit, so MAA is now the worst third position from the bottom, 8.3 percentage. Let's go to the portfolio liability. We'll see we'll receive dividend from TSLY, but with the dividend it also it won't cross $1,000. So right now we invested around $1,000 plus the last month dividend, so it would be around 1,039. So if it is more than that, we'll take the dividend. Otherwise, we'll reinvest the dividend. Tesla also went down, so we invested. Initial investment was $1,000. Right now it is 1,062. Let's go to our financial independent calculation sheet. And this is our long-term pie. So long-term pie, it's Disney. That's where I found out. Okay, and went on with Disney as my long-term share. So right now I invested $2, and now it's worth 1.99. If you see, 84.85 is my average price. Currently it is 84.35. There's not much difference. Once we get a lump sum amount invested into Disney, we'll see What's the performance? We reduced our debt also. Currently it is 1843. Started with 2K. Last week we repaid 7, 12, 19, 30, 50, $58 back to our debt. And we expect a projected bill of next month is 13.59. Let's go to our Excel sheet where we calculate the financial independent date. So currently we are getting 142 as per Finvis. Our monthly dividend is 142. But I calculate the actual, it's around 120. So this is like an average of yearly dividends in Finvis. And our annual dividend now it's 1377. So our monthly target as of now, as of today, is 5275.06. And with the calculation, we'll receive our monthly fire target and fire date will meet at 22 offer. So we are still in 23rd century. And our dividend at that time, the monthly dividend would be 1 million. And my age would be 219. Let's go to whatever it's newly added. So TSLY, we got a dividend from TLTW, we added to TSLY some of the share, and right now it is 6.82. Still, it's less than 35. And Netflix, it's 19.72. It's more than $15 as per Finvis calculation, but actually it's less. We will keep on adding to TSLY until TSLY have $6 as dividend. And then Xfinity, that is 23.68 we have received. So the current value it's 7797, and our cost total cost is 7.8k. So currently yield on cost is 17.57, so it's more than we are expecting. That's it. So there is no much update. So last week it was 2205. Now we are 2204. So we saved around 272 days. So that's like a positive sign. And also age wise, it was 220 last week. Right now our financial independent age is 219. So 1 year saved there as well. That's it for this week. Thank you.